What's up, you guys? Sam Hack here for Rent to Retirement, and today I'm recapping the real estate and economic news for the week of October 25th, 2021. First, let's start out with inflation. Some people may say it's not inflation, it's just supply chain bottlenecks. Well, the definition of inflation is when the cost of goods and services increase and the purchasing power of the dollar goes down. So regardless of the cause, we are currently experiencing inflation. Consumer brands of all sorts, such as in the restaurant industry, grocery industry, and household goods, have all increased their prices. Not only have prices gone up, but Americans have not slowed down their consumption levels. Americans love buying stuff. Even Twitter and Square CEO Jack Dorsey said, hyperinflation is going to change everything. It's happening. Hyperinflation indicators are yet to be seen, but we definitely know we have a rise in the consumer price index. So what can you do about the purchasing power of the dollar decreasing? Buy assets like real estate that usually increase in price at the same level as inflation. Next, let's talk about 3D printed real estate. Crazy, right? A new 100-house development project is set to be built next year in Austin, Texas. Well, these homes are a little different. These are 3D printed homes. Basically, these homes are made from a giant concrete toothpaste gun and are layered to form a 2,000 square foot home. 3D printed homes could be a major help to the construction industry's labor shortage and supply chain issues. Unfortunately, the cost will be comparable to human-built homes, and in Austin, Texas, that's not a cheap proposition. Next, Senate Finance Committee Chair Ron Wyden proposed a truly novel tax change to cover the Democrats' $1.75 trillion spending bill. The new tax rule would only apply to around 700 taxpayers. So what is the new rule? A tax on unrealized capital gains. Currently, stocks or real estate are only taxed when they are sold for a profit. Under the new tax proposal, you'd be taxed on those gains even if you haven't sold that asset yet. Most savvy tax and finance minds have pointed out that the proposed tax plan is virtually impossible to work with. NYU finance professor Aswat Damodaran said that the proposal is perhaps the worst thought through and most ineffective attempt ever at rewriting tax code. This is because nobody really knows how you would deal with the tax if the investment went down in value, or how someone would pay the tax without selling other assets first. Let's wrap up with our economic indicators for this week. Our unemployment rate in the United States is at 4.8%. Our average days on the market for US listings is 43 days. Our median home price is around $380,000. Average rent around $1,600 a month for a one-bedroom apartment. Average interest rates for primary residences with ideal credit. For a 30-year fixed-rate mortgage, we're looking at 3.02%. And for a 15-year fixed-rate mortgage, we're looking at 2.30%. Average interest rates for investment properties, we're looking around 3.75% for 20% down, and around 3.375 for 25% down on single-family investments with 740 plus credit scores. As you can tell, inflation is increasing, housing is getting more expensive and more scarce, and new tax proposals are getting pretty scary. If you want to fight against any of these factors, make sure to invest in great cash flowing investment properties with tax benefits and many, many more financial upsides. We can help you get started right here at Rent to Retirement, so set up a call with one of our investment counselors using the link below. Also, don't forget to check us out on social media on any of our platforms, as well as connect with me personally at Sam H Real Estate. This has been Sam Hack for Rent to Retirement. Thanks for watching, and I look forward to seeing you next week. Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.